Greetings, Dr. Jeffrey Scott here, and this is my weekend market update for the week of Sunday, 2/11/2024. I'm doing this midday on Saturday, so obviously I have no insight to futures for Monday or anything that happens from the middle of Saturday on, should there be any major world events. My email address is hgsidoc@gmail.com. I am more than happy to respond to any questions via email, or you can put in the remarks section on YouTube. It's beautiful down here in South Florida. It's 79 degrees today, but it's too choppy to go out in a boat because of, I guess, the El Nino. But I title this Climbing a Wall of Worry, and I listed on the left Hindenburg Omens. We've been talking about that for weeks. What are they? AD line divergences, declining stocks above moving averages, bangos. We all know about the Fed resilience. As much as we want to hear that they're going to cut in March, they're pretty clear they're not going to cut in March. And now the question is May. And then why are rates rising? So I learned a long time ago that we can start adding up all the reasons why the market's going to tumble, and kind of the market still can go higher. Now it's going to stop at some point. But right now, the last week, couple of weeks, boy, this has been like a raging bull market. Kind of stealthy and kind of unloved, but it is what it is. The disclaimer, this is for educational purposes only. Any recommendations should be taken in the spirit of education, not investment advice. I am a doctor, not a broker. I am independent. I'm not affiliated with any software vendor or trading company. Every tool that I use I paid for. And trading involves risk, and you are solely responsible for any investment decisions you make. If you like this video and you're thinking, man, I only wish I could do this for 8 minutes, can I find it? Yeah, you can. It's stocksanddocs.com. Now, that one is really dependent upon my work week. I work full time, so I don't get these every day, and I try to do them before the market opens. So stocksanddocs.com for a short daily analysis. Just want to remind everybody, I started mentioning to my small group that I correspond with that we are going to have the Orange County event this year. I'm so excited. Not exactly sure who will be on the docket with me. Typically, we have Chris White joining us from England, who's a proprietor of EdgeRater, David McMullen, who's a fantastic trader if he's available, and others. So we'll know more as we go. We typically come in on Thursday. We meet Friday, Saturday, and half a Sunday, and we run this meeting to be low cost, typically 300 to 500, mostly on the lower range. We're not asking for commitments, firm commitments. We're asking of interest. If you're interested in attending so we can scope out if there's interest, please email Greg Mills at gam72054@aol.com. Major markets always tell the story, and if you look at the yellow, which are the major markets, you'll see some pretty impressive moves on the week. Now, skipping the yellow lines, look at Bitcoin was up 10.8, 4.4 on Friday. The IBD 50, which has been kind of quiet for a long time, we've been talking about it in Stocks and Docs now for 2 weeks, how it's moving, up 4.3 on the week. And the ARK Innovation, which is small cap growth, but then you add in things like Tesla, the ARK KK was up 6.3, and even oil was up 6.2. So a lot of things were moving. Now on the equity side, the Russell 2000 led on the week up 2.5%, but it's a laggard. But you could see it's 3% away from a 52-week high, which would not be the all-time high for the Russell 2000. And then you look up above, you could see the NASDAQ Composite up 2.3 actually outperformed the Qs, which are cap weighted, and just the top 100 in the NASDAQ, which were at 1.9. Dow was barely positive on the week. Spiders 1.4, NYC up 1%. So hard to say this wasn't another strong week. It was. If we look at how the market ended, this is a Q Edge tool. This is, I've got several monitors, and this program sits on one. It's basically an Excel spreadsheet that's driven by Refinitiv data done by my buddy Sagar. And it tells me so much information intraday. It tells me what are the sectors that are leading. I can get that a lot of places, I know. But how about how many sectors are up, how many industries are up, how many stocks are up? And then the bucket analysis, which I talk about all the time, how many stocks are above the Bollinger Bands here, 13 versus below. So it's interesting, we now, even though breadth has been the challenge, at least when we look at the S&P 1500, which are some of the more widely traded names, we're starting to get a little bit frothy. If we look at the S&P 1500, 58% of the stocks are above the midline, 42% are not, and that's a little bit above neutral. So the market is strong. If we look at, whoops, I'm sorry about that. If we look out over the last month, it was 50-50. But if you look at the last day and the last 5 days, we're improving. So have we finished our pullback, and are we going to go higher, or are all those factors that create the wall of worry just going to add up and ultimately the market's coming down? Now, I use a lot of terms, and for the purpose of brevity, I'm going to do a second video this weekend. And just for a warning, it will not be wealth charts heavy. I love wealth charts, but I use a lot of different programs for market breadth. And I'm going to show you sort of why I get worried about the Bangos and the Hindenburgs. Just looking at this chart, which is another Q tool from Sagar, you could see that in yellow, the stocks above the 50, and in white, the stocks above the 200 have fallen while the markets have gotten higher. And this is a composite total market view, which is combining the NYSE and the NASDAQ. So that's one thing that concerns me. These blue arrows here are called Bangos. The Bango is a signal that you get, which is sort of what they talk on TV, the baby out with the bathwater opposite. So the bingo with an I occurs at a major low, and you could see some of these red lines or magenta lines pointing down here. You could see them at this low down here. When I see the magenta lines pointing down, that's the baby out with the bathwater. When I see the blue lines, or cyan, I'm colorblind, so I'm going to call it blue, pointing up at a high, that's telling me we're buying everything in sight and that we're approaching a top. If you go over to the far left, this was the high in January 23. You could see a Bango occurred. The market pulled back. We got the bingos. The market ran up, and we started to get Bangos telling us that the market was tight or getting risky. Little pullback, and then look what happened up here in July. A lot of Bangos. And then that first yellow skull and crossbones is the first Hindenburg Omen signal. And that combined with the Bangos lets me worry about some type of a top and a correction is coming. Here was a confirmation of the Hindenburg. Here are more Hindenburgs, and you could see here some bingos, and you can see the market just continue to fall until we got the bingos and we started an uptrend. Well, what happened in December? After a huge run in November, we got some bangos and a little pullback, and then we ran into January, and now we've got confirmed Hindenburg Omens, and these are occurring not just on this combined composite, but I've got confirmed Hindenburg Omens on the NYSE composite. I've got confirmed Hindenburg Omens on the NASDAQ composite. And we had a Bango on Friday. Is there a reason why I continue to say I expect this market to pull back? And yes, but I don't know when. I don't know when. And if you've been sitting out on the side, which I have not been suggesting, you've missed a massive run in this market. So I think my words are going to be the same as they've been for the last several weeks. You got to participate in this market. This is not a time to be on the sidelines. It might be Monday, but it wasn't on Friday or the last several weeks. Just be careful. Stops are in. I don't use margin at this time, and I'm being very careful. If you look at the Nick Drendel, this is on another one of my machines, and it's going to tell me what the market's doing at a given moment. You could see on Friday, the Dow actually was weak. We know it was the weakest on the week. I hate to say the same word twice in a row. ARKK led. IWO, small cap growth doing well, Q's doing well. It was a strong day outside of the diamonds. And you can see outside of the diamonds, most of the indices finished in the top. When you look at these indices, all of them, their moving averages are pointing up. That's bullish. If you look down here at the new high, new lows, we are green on both the Nasdaq and the NYSE. Markets don't usually go higher when you have more new lows and new highs. So that's a really nice thing. And you could see going back how many periods of time that this is true. That's exciting. If you look at the week and you look at what was the big performer, well, to the upside on Friday, you saw crypto and you saw solar, you saw semiconductors and biotech. If you look at where the weakness was, it's up at the top here. Marijuana, which is strong the prior week, you could see 20-day change 29.4. Gold miners were weak. Oil exploration, energy. And if we looked at the week, the big winner again was crypto, retail, solar, semiconductors. Even China's running. And biotech, after a couple bad weeks, has turned around, was up 3.5. So in wealth charts, and I've taught you in my live sessions at the Wealth 365, and frankly, I can do the same thing in other platforms. I have a weekly market timing model. In fact, if you, for example, have TradeStation, you can compete the same model where I look at two things. The price of the underlying, make sure I'm on a weekly. Here's a spider, the Qs, the diamonds, and the Russell. And if I look at, on wealth charts, it's the same map. Is price above the line, which is the 30 period WMA, and is my weekly bongo green. We are now long on the week, but we also just flipped back to long on all four on the daily. So here's a counterpunch to the bears saying markets are still bullish. Now, why are the rates going up if we got Fed cuts? Well, I think there's a lot of concern that maybe perhaps the inflation numbers that are coming this week, maybe the economy is stronger than the Fed wants it to be. But I think that's a bad thing because if you look at when this market bottomed, October, November, this is the 10-year. The yellow is spiders, the white is the 10-year. Yellow is spiders, the white is the 30-year. When the rates turn down is when the markets turned up. So even though rates and markets may have gone up together this week, I still think at some point the rates will hurt the market if they don't stop going up. The question of recession, I think you've heard me 1,000 times say, yeah, someday, but not tomorrow. I don't think we get a recession this year, in my opinion, and the reason why is because it's a presidential election. They are up the predominance of time for the markets, and with all the House and the president coming up for re-election, don't you think there'll be pressure on the Fed to stimulate and also for fiscal stimulation if this market seems to roll over or the economy rolls over? I think so. Now, look at the 10 versus 2. Here is the zero line. Notice that the recessions in the gray bars occur after you cross over and you're getting close on the 10-2. You're not close on the 10-3. Optimism could be looking at this chart here, which is a Philadelphia Diffusion Index. Recessions usually occur when you're below minus 20, and we've been above minus 20 except for this one spike back several months ago. And we're not seeing any of the credit tightness that you'd expect if a recession was coming. We all hear about what's going on. Car loans are being defaulted. The office space is empty. So what's going to happen when the leases come due? So there's a lot of concerns. And maybe I should have just added a line about property in the wall of worry, because right now it seems to be that the market does not expect a recession. Now, new highs on the market's breadth mixed. We didn't lose much on the stocks above the 200, stocks above the 40, but as you saw on the Q tool, when stocks are going up and stocks above the moving average are going down, that's a divergence. Divergences are not good for the markets. They don't always work, but they're one of the signals that suggest that this market is at risk. We look at the 2121, we're even short term, we're getting close to overbought, but we're not just yet. Now, if you look at AD lines and divergence, so I've got the NYSE here. So I'm looking at the AD line, the NYSE versus the index, they're kind of lockstep. I've got the large cap or the NASDAQ 100 here. In yellow is the AD line and blue is the index. They're up in lockstep. Below it, I've got the high cap 1000 or the Russell 1000. And notice again, the index, the IWB, and the AD line are in lockstep. The problem occurs when you broaden out. If you look at the NASDAQ composite, despite some improvement this week, you got price up, AD line down. And when you look at the, it's supposed to be, well, this did not come out exactly right because I put the wrong index here. This is supposed to be the low cap 2000, but the same thing is occurring on the Russell 2000 where the AD line is not keeping up with price. Buckets we talked about were a little bit more than neutral, which is bullish but not overtly, and we have stocks above the Bollinger Band. So even though there is not full participation in this market, there's enough going on that says, hey, things are not perfect. And other things are. We've had confirmed Hindenburg Omens on the NASDAQ and the NYSE. Classically, it's the NYSE, and we hadn't confirmed until Monday this past week. However, I think the reason why we refer to the NYSE all the time is probably because it's the one that's the oldest and the only one that we had data going back to the recession. I also think there's a problem there because if you look at technology, it's much heavily weighted in the NASDAQ. And if you see the NASDAQ, you can see a lot more Hindis fired. So I follow both, but obviously since the NYSE is the classic, when it confirmed, that was more meaningful. Now, if you look at the week that we just went through, it was a growth stock trader's dream. Of course, 50 was up, ARKK was up. But if you take all the stocks, and I use a universe of $2 and 250,000 shares, and you look at that universe and you look at ERG, which is EPS rank times relative strength rank and growth rank, or added all three, the max is 297, and you vary them by each decile here, or each 10 points. When the market goes up as ERG gets higher, it's good for growth. It was good for growth. Look at how important relative strength was. Now, interestingly, earnings was not exactly perfect like that, so it still shows that some things that don't have good earnings were participating. And if you look at a large number of different stock groups that I follow routinely, you could see there's vast majority is black, saying this was a good week for the types of stocks that I trade. Now, know your news and earnings dates. You could see here we got CPI, we got PPI, and we got jobless. There's other things there too, but I think those are the three big drivers, I don't know what that word means. And we also have on the right a lot of earnings. It's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. So markets advanced again this week. On Friday, participation broadened as the lagging small caps led for the week. Positive earnings report were once again rewarded. Markets remain overbought by many measures. We had another bango on Friday. We have confirmed Hindenburg Omens on the NYSE and NASDAQ, but the market continues to climb the wall of worry. Rates did rise, which is concerning, especially in the face of Fed resilience to not cut. This week we get important inflation data, well as for employment. Considering market strength at index level and both my weekly and daily timing models are long for the major indices, I remain long, but I'm not willing to go to margin. We have now surpassed 5,000 on the S&P 500, woohoo, and some are already talking about 6,000. That's only 11-12% away. I believe the markets will be data dependent, just like the Fed, and will be closely scrutinized for inflation data to give us a signal of when that Fed first cut will occur. Every Friday night I look at 1,000 stocks, and I did see a lot of bullish patterns. But so many have made a giant move and look extended. Yes, I'd love to add to my NVIDIA. I'd love to add to my SMCI, but these are at massive all-time highs at the high jump, and I really have to see a pullback for me to want to buy more. But will we even get that pullback? And I like to think of myself as the risk manager for my family. That my wife, God bless her, 38 years, lovely, wonderful woman, um, is trusting me with our family nest egg. And hopefully much of it will remain when we move on so that the next generation will have it. And I'm at 66, I'm too old to let my nest egg go down 40 or 50%. So I must be a risk manager. I have to use stops, I have to have tight money management, and I have to look at the markets. Now, my son is maybe 36. He could be much more aggressive because he's got a long time to make up the money that he has left. But I think as a prudent risk manager, it is important to put together all the different things that are going on in the market as you put your own valuable assets at risk. Again, my daily market analysis pre-market at stocksanddocs.com. And now on to the charts. So I always like to start, well, usually I'll start here with the weekly market timing, which I already showed you. I'll show you one thing that I think is kind of interesting and neat on the IWM. I love patterns. And if you looked at what the IWM did before the market topped in 2020, well, it didn't top until late 21, but it entered early in 2021 a box. And you could put the low of the box here, you can put the low of the box there. I don't think it matters. But it was in a Darvis box going back to the beginning of the year. It did a false breakout of that box in November. And I, for one, took that as an extremely bullish sign, was extremely excited that the market was going higher. And it promptly dropped. And we know what happened. It went on to make new lower lows and lower lows. Now, no one's talking about this, but aren't we in another box here at a lower level? And didn't we just do the same thing? False breakout? It'll be interesting to see. It looks like we're creeping back out of the box, and a failed signal has as much meaning as a signal. And if we take out this level decisively and go higher, that is going to make me really, really bullish. So I'm interested, I'm excited, I like what the Russell's doing, and I like the fact that all my major indices on the weekly charts are in buy signals. As I mentioned, the daily is also a buy. Why? Because we just flipped on the Russell. Very exciting. If we go and look at the daily indices, and here I'm looking intraday on a 5-minute chart at the spiders, you can see we got up to the range on Monday at about 12:30. It went sideways until we opened up the market on Wednesday. On Wednesday, we ran up until lunchtime, and we went sideways almost to the end on Thursday, pretty much to the end on Thursday. And I actually thought that maybe we're going to do that for a while until we got to the CPI and PPI. But we had exuberance on Friday. We gapped up and we traded higher into the end. A very, very strong session and strong end of the week. If we look at the daily charts, now these red lines, and I'll show you more, are a tool inside wealth charts. And as I was watching Rob speak today, I thought, I should put that in. It's called Divergence Tracker. I think it comes as part of the package, not my package. I think everybody has access to it. And this uses a different vehicle for calculating divergence than I've shown you thus far. And right now it's not showing divergence on the daily spider, but you can see it is a nice thing that gives us a sense of when the market's at risk that's going to drop down. So how can you not be excited? All-time high on the S&P 500. Over 500 on the spiders, over 5,000, and on Friday it was up 0.5%. We we have divergence that has not yet been confirmed on the Qs. So the Qs all-time highs up almost 1% on Friday. We had divergence on the diamonds. Now they're going sideways. They were down 0.16 on Friday. And the Russell is getting into an area where non-confirmed divergence, and that, when you see that, you got to pause. But until it actually triggers, it doesn't mean a whole lot to me. And you could see the new daily bongo change and up 1.63. You kind of know where the VIX is going to be when the markets are so strong. About the only time I look at the VIX is on the weekend because mine updates after the market opens the following day. On Monday, on Friday, the VIX was actually up 1%. If you look at the week, the VIX had a tough week. Again, was down 6%. The dollar made a move early in the week, but then has gone sideways and struggling to get above that falling 50. I think if you're looking to see where the market's going to go, this is one of the things that you're going to want to look at to get a sense of what's coming next in the market. If we go to commodities, dollar is struggling. Why isn't gold going up? Well, maybe because risk is coming out of the market. 0.3 down on gold, while silver, which will go up in strong economies because it's also industrial, is up a little bit. Oil is inching its way higher. It's now taken out the 50 and the 200 and way off the highs, obviously. But if oil was to break out and approach this area here, you might expect that to put some concerns on the market as well. Natural gas is just toast. And the only reason the UNG is as high as it is because there was just another reverse split. And then the 10-year, like the dollar, is something I'm watching closely. It's kind of consolidating up here. But remember what I said, the markets did better when the rates fell. If the rates go up, that's going to potentially put the market at risk. On the breadth, I like to look at certain things. I like to look at the TLT versus spiders. And why do I do that? Because I know that if we ever break out in this one, that it would tell me to worry about a recession. If you were to go back in time and look at 2020, 2007 and 8, 2003, 2019 for that matter, or I think it was 19, maybe it was, I have to go back and look, you'll see periods of time where the TLT spikes in relationship to the spider. We don't have that now. I like to look at the broader market versus the spider. Right now, the cap-weighted spider is stronger, as is the cap-weighted Qs, despite the fact that maybe that did not hold true as much on Friday. Not a whole lot of that information there today. Next, I want to get a sense of what sector is working. So I'm looking at two things. I'm looking at 11 S&P 500 sectors ratio charts versus the spiders here. This is the spiders in the lower left. The two things I'm looking for, the strength will be pointing up. Actually, three things. Where am I in the level? The higher the better. And what is the color of the last bar? Because blue is strong. So let's start with what's not working. Defensive, staples, real estate, utilities have all sold off. Even XLV, which was trying to get a run, has weakened. Probably good for the markets. What turned up? Look at technology, blue and heading up again. Discretionary, not high up, but blue and heading up. Industrials is confused. Financials has come down a bit. Energy is weak. Communications down from the top, but still high in the level. And then biotech started to move last week, and you could see strength has come back into biotech. Well, that gives me a sense of what's working. When I see the staples, real estate, utilities doing well, it tells me be careful about the market. Next, I like to go into scanners. So I start with the heat map, and I look at the S&P 500, and I knew it was a strong day, and I especially knew it was strong on big cap tech. And you could see that right here. It also was super strong on the Russell. A lot of times when you look at the Russell, it's weak, but the Russell 2000 looks great. All right, well, that's good to see. Now, sector scanner, and every time I watch Rob use it, I get sort of, I need to use it more. So one thing that Rob did that I thought was really smart is he only left on, he took off everything except for the algo score. So he took off the weekly everything except daily, weekly, and then monthly. And that way he can look at just the algo score, which is his algorithmic way of looking at where strength is in the market. And if you want to go back to the sectors and look at the strength there, when I see one stock 14, I get a little nervous. That's an industry group, not a sector. But if we look at the sectors, you can see technology, industrials, discretionary, healthcare, same things we just talked about. You can look at daily strength, weekly, and monthly. If I wanted to take the top 3 in daily, the top 1 or 2 in weekly, make sure I got them. I have them. I don't have these two. Healthcare, let's add healthcare. That covers the top 4 in monthly. And hit compare. That brings up all the industry groups in those sectors. Now I believe I have a price and volume filter. Let me make sure. I want to have, I guess I do not. Take that back. That's in a different set. All right. And so now I want to do the same thing here, which is kill those columns. And I'll look at what's the strength in the daily. I'm going to hit the first one, which has only got one stock in it. I'm going to go down, say, to here. Then I'm going to make it by weekly. I'm going to fill in the ones up at the top that I don't have. I'll just do these 3. Then I'm going to go to monthly. Is there anything that I didn't stick? Tools and accessories. All right. And now I'm going to hit compare. And then this is going to bring up the top stocks of the market. And I might just look at the daily and go down to 750. See what my default watch list is. Yep, I knew. And then what I could do is I could make an ETF and or make a index and put those stocks in the index. That's one thing that I do. What I also like to do is just go to Wealth Scanner. Let the product do it for me and show me which groups have been outperforming. And this is that algorithmic signal. Right up at the top is the IBD 50. Now, you might wonder what's in the IBD 50. And I actually went and built a group for the IBD 50. And let me just show you how I found that, if I can. I may have killed it. Nope. I just went to bar chart and I put in FFTY, hit enter, and it told me the constituents of the FFT. I could download it as a CSV file, and then I can import it into wealth charts. How easy is that? So, we've got IBD 50, global risk management. That's kind of bond sounding and risky. I mean, it tells you that the market's at risk. XLI is industrials. I mean, that's probably not risky. It's telling you there's risk. Industrials, Russell growth, Spider, FANG, core S&P 500, Spider growth, S&P US growth, global growth. So there's no question that growth is in fuego right now. All right. So now I want to find stocks to buy, and I want to look at growth stocks. So there are a couple things that I have done that work for me. Now, I have a scanner. It's called the CAT scanner. It is a marketplace add-on in wealth charts, which means it's a fee. It's a one-time fee. If you have interest in it, you can typically buy them at the Wealth 365 events, or if you email me, I could hook you up as well. I create a list every week, which will be on the YouTube under remarks. And in that list, what I have done, just to give you a sense, is I basically have built out a bunch of watch lists, both bullish ones and bearish ones, from various lists that I might download from places, from scans within some of my programs, and then some of the scans are in here as well. You can see some of the things that I'll do from TradeStation. And then I combine everything into a bullish bucket and a bearish bucket. And so my combo IBD is the bullish list. So if we look at the combo IBD daily list, and I like pullbacks and uptrends. So pullbacks and uptrends is a sub-scan that says stocks 5 and 500,000. I like options, so I put a 1. That doesn't mean it's liquid. It means they have options. One bullish dot, no bearish dots. I want a reversal to the upside on the daily within 9 bars. There's my pullback. And I want my current daily and weekly bongo to be bullish. That's my scan. I then run it, and let's see what comes up to the top. I don't know anything about this company door. And let's see. So the criteria are a pullback. So it's had a pullback. Right here it had a little pivot. It had massive volume, a gap, breakout, and momentum. I'm going to ignore the high jump because it's sitting right on top of the 200. The relative strength and OBV are super strong. It's not a cheap stock. I have no idea anything about Masonite International. I might go do some diligence and see, but I think I can find better looking charts. And the reason is not this bar, it's this bar. This bar is extended. I take that back. I was thinking this was the bar, but they had this little bar up here. So it had a massive move. Obviously, I'd want to know what the news was, but it's tough for me to chase something after a gap like that in a toppy market. The next one was Genpact Limited. So this one, again, not a perfect stock. Uptrend, pullback, breakout here. You had volume, breakout momentum dots. Here's your pullback on the bongos. Not overly extended. Relative strength and OBV picking up. I give that an eh. I can do better. Why? It's right on the 200. That's a place of failure. Mueller Water. Well, that looks a little bit better, but still not perfect. You've got a nice little gap up here. A wealth signal, which is Rob Hoffman's signal. My EMS signal. A gap, volume, breakout momentum coming out of a squeeze. Just flipped on the bongo. Relative strength and OBV looks good. I'll take back my comments. That's a really nice looking chart. So perhaps I'm interested in this, so I'm going to put a check mark in it. Next one is Onto. Onto Innovation. Well, I love the fact that it's in a beautiful uptrend. That's positive. Had a gap up, volume, breakout momentum. Relative strength and OBV look good. Just here's your little pullback. The bongo picks it up for me. And that one also looks interesting. So I might put a check mark in that one. Applied Materials. I look at this one, I get nervous about extension. It's at 100. And this, unfortunately, is a story of a lot of the great stocks that I looked at this week, where even though it's had this recent pullback, it's extended. It's far away from the 200. It's 40 points away from the 200, which is over 20% from the current price. The high jump is at 100, which is a very objective finding. And again, does this look like it's going higher? It sure does. But when you look at things like NVIDIA, well, it would help if I spelled it right. Come on, NVIDIA. Instrument. All right, I'm going to try. I keep doing it wrong. NVDA. I must be hitting the wrong one. That's all right. That's NVIDIA. Well, it keeps going to NVDO, even though it says NVIDIA. So let's try this. NVDA. Here we go. Um, Great looking stock. This was where we bought. We talked about that. I don't know if that was a wealth chart. It's one of my live events that I did. That one was coming off the moving averages. Here, look at your high jump. It's at 100. Does it go higher from here? I bet it does, but I can't buy it up here. It's too extended. How about SMCI? I talked about that one earlier. This one came out, pre-announced earnings, and did this. And then earnings came out and they went the rest of the way. Again, extended at 100. It looks amazing. It's great. If you got it, congratulations. I can't buy it up here. It's too far extended. One that I know looks good. Well, let's look at one spawn. This is a beautiful chart and one that's, I think, buyable here. Strong uptrend, a pullback into the 50, and we just broke out here with big volume, breakout momentum signal coming out of a squeeze. All three bongos are great, 62% on the high-low jump, and relative strength and OBV look good. You notice how a simple scan is bringing the best stocks in the market up to the top? How about UiPath? Here's another one. Now this was even better on Friday when I had my EMS signal fired and we had 3 dots. But even on Saturday, you're breaking out. You're not extended. Relative strength and OBV look good. This one looks like it wants to go higher. Sprouts Social. I get scared by the word social. But that's probably just because of my age. It's got an uptrend. Had a nice breakout on Friday on good volume, not extended. And I could go down this list very far. C3AI is trying to come back, but until it breaks above the 200, it can go without me. Amazon, man, this thing is a killer. Multiply it by 20, it's back up to pre-split 3,500. The high ever was about 3,850. So Amazon is back, big time, getting extended. Aristocrat Networks looks great. And then I showed you IBD 50. Let's look at ARKK as well. The FFTY is the IBD 50. And try this again. This looks more like the stocks that I want. It's not extended. It broke out above the 50 from a squeeze. Relative strength and OBV look good. So I could take those components. Let's look what's in the ARKK and see if anything in ARKK might be giving me a signal. And I always rank them by the dots. Right away, UiPath, the one that we liked a few minutes ago, that I like because it's just me on the video. I like this one a lot. This is a high growth stock. It's part of ARKK and doing well. Robinhood looks good. I don't know. I guess I don't know. It's not my kind of stock. It might be time to buy this thing. It's not extended. RS OBV look good. I like the green dots, taking out the 50. The next one is PagerDuty that had 2 dots breaking out here. Twist, I think, is about to break out as well. So ARKK's got some interesting stocks. What about the IBD 50 ETF? I made one of those. Datadog in the cybersecurity space. Nice move up. I don't like the fact it reversed off the high on Friday. Sprouts we looked at, Aristonet we looked at. Shift 4 payments. Big uptrend breaking out after a sideways consolidation. What's not to like? You notice how many strong looking stocks we're seeing? Everywhere we look, we're finding stocks that are potentially attractive. I'm looking at pullbacks here. Because I'm looking at pullbacks, I'm going to get a different type of stock. If I go back to, for example, the IBD 50 or to the combo list. I could look at stocks that are going to the moon. So I could go here and I could move this around somehow. Look at rockets. I'm going to find stocks that are getting extended. OCUL, Ocular Therapeutics. RELX. What a beautiful chart. What a beautiful chart. But it's starting to get extended. A lot of good stocks. So I like to stick with my pullbacks because I can get them at better buy times. In a bad market, I can do the same thing on bear retracements. Lastly, I wanted to do is I have another group I look at, which are stocks that have high relative strength. I said that with IBD 50 positive, it makes me think that growth is working. And I showed you that in some of the slides. So what was on that list was Signals, Datadog, Sprout Social, Arista Networks, Shift4 Payments. Apellis Pharma is one that broke out, sort of failed. It looks like it's running again. CrowdStrike, oh, what a beautiful stock. Oh my God, wow. But it's extended here, and that's kind of a reversal looking candle, so I might be careful. JFrog, I think we talked about last week. It had a very strong week with a big breakout. Snow, I know we talked about last week. 1, 2, 3, 4, 5. This was the bar last week, and it looks like this thing is for real and going to run. I talked about how I use it in my business, and almost everybody in technology that is a data set has Snowflake. And then Workday is another one, but these are long gone in my opinion. Well, some of these are long gone. So I've spent 45 minutes. I've given you my thoughts on the market. I showed you a number of different ways, whether it's with ratio charts, sector scanner, wealth scanner, to identify the leading sectors in the market. And I took you through where I think are some of the hot stocks. I use my scanner to make my life easier, and I am a pullbacks and uptrend trader. The nice thing about pullbacks, if we were watching this on Thursday night, I would have looked at Workday and I would have thought Workday looked attractive. Now, because of the pullback, I could have set a stop that was much closer to my buy price. Now, my stop might be all the way down to the 17. So buying them at that pullback point allows me to have a very tight stop instead of looking for a stock like Arista Networks that's had a big run, because here stop is under the green line, under the green line. But here, if I still put under the green line, there's a big gap there, which means my risk is higher and I can buy less shares. So I hope you enjoyed this. Sometime this weekend I'm going to do something about Hindenburg Omen, just a short video of why I like it so much. And I hope you have an awesome weekend, and we'll see you Monday in stocksanddocs.com.